Everyone remembers the first time they had money of their own. Not inherited money, not borrowed money, money you earned. And with it came one burning question. What do I do with this? Investing. The word sounds distant, reserved for the wealthy, for the educated, for people who already have everything figured out. But what if I told you that the most powerful financial decisions of your entire life are not made when you have millions? They are made when you have almost nothing. This is your story, at every level, starting right now. Level 1, $100. The seed where every journey begins. $100. To some people, that is lunch money. To others, it is 2 weeks of careful saving. But in both cases, in every case, it is a beginning. And beginnings are everything. Most people look at $100 and see a limit, a ceiling. They think this is too small to matter. What can you even do with $100? That question is exactly the wrong one to ask. The right question is, what does this $100 teach me? Because at this level, the return on your investment is not financial. It is psychological. You are not just putting money somewhere, you are building the identity of an investor. You are someone who chooses the future over the present. That shift in identity is worth more than any interest rate. So what can you actually do with $100? You can open a money market fund and watch your money earn more in a month than it ever did sitting in a regular bank account. You can buy government treasury bills, lending your money directly to the government at rates often between 8 and 14% annually, safe, predictable, powerful. You can buy fractional shares of the world's greatest companies, owning a tiny piece of Apple, of Amazon, of global index funds for less than the cost of a dinner out. Or you can invest that $100 in financial education, a book, a course, a mentor's time, because the knowledge you gain now will save you thousands in mistakes later. Every single one of these is a legitimate investment. Every single one of them moves you forward. Here is a number I want you to sit with. $100 invested today, left alone for 30 years, growing at 10% annually, the long-term average of global stock markets. That $100 becomes $1,744. You did nothing. You made no more decisions. You simply chose once not to spend it. That is the miracle of compounding. Albert Einstein reportedly called it the eighth wonder of the world. Those who understand it, earn it. Those who don't, pay it. Your journey begins with $100 and one decision, the decision to begin. Level 2, $1,000. The foundation, building something real. You did it. You saved $1,000. I want you to understand how significant that is. Most people never get here, not because they couldn't, but because every time they got close, life happened. A bill, a desire, a justification, and the money disappeared. You held it. You protected it. Now it is time to put it to work. At $1,000, the game changes. You now have enough to think in terms of allocation, not just where does this money go, but how do I build a strategy? Here is a simple framework for your first $1,000 portfolio. Put $500, half, into a broad index ETF, something that tracks the global market. You are not betting on one company, you are betting on human progress, on civilization continuing to grow. That is one of the safest bets in history. Put $300 into something stable, a government bond, a money market fund. This is your ballast, your anchor. When markets get turbulent, this is what keeps you from panicking. Put $100 into a single company you genuinely believe in. Study it, understand it. This is where you develop your instincts as an investor. And keep $100 liquid, in cash, accessible. Because opportunity knocks unexpectedly, and so does life. Now let me show you the cost of not doing this. 2 people, same income, same opportunity, both have $1,000. Person A buys the latest phone. It costs exactly $1,000. a beautiful device, the envy of friends, worth maybe $200 in 12 months. Person B invests that same $1,000 into an index fund and does not touch it. 10 years later, person B's $1,000 is worth $2,593. 20 years later, $6,727. 30 years later, $17,449. Same money, same starting point, completely different lives. The phone is long gone. The investment never stopped working. There is one more thing I have to tell you at this level. At $1,000, you will be tempted. You will hear about a cryptocurrency that is about to explode, a stock tip from someone at work, a scheme that promises to triple your money in 60 days.
Walk away. The data on day trading is brutal. 80% of active traders lose money over any meaningful time horizon. The people selling you shortcuts are profiting from your impatience, not your success. Consistency, patience, boring, ordinary, relentless consistency. That is the actual secret. And now you know it. Level 3, $10,000. The crossroads, where strategy becomes everything. $10,000. This is the number that separates people who play at investing from people who are serious about it. At $10,000, the decisions you make in the next 12 months will determine the direction of the next 10 years of your financial life. That is not an exaggeration. That is compound interest doing math. So, before you touch a single dollar of that $10,000, before you move anything, you must answer one question. What is this money for? Is it for retirement 30 years away? Then you can afford to take more risk, invest in growth assets, and ride the storms without flinching. Is it for a home in 5 years? Then you need some stability. You cannot afford to see your down payment cut in half in a bear market. Is it for your children's education, for a business you want to start, for financial independence? Your answer changes everything. Your timeline determines your strategy. And your strategy must be written down, not in your head, written. Because when the market drops 20%, and it will, you need a plan that your future panicked self already agreed to. At $10,000, a reasonable portfolio might look like this. 40% in global index ETFs, the bedrock of long-term wealth. 20% in bonds or fixed income, your stability in volatile times. 15% in emerging market funds, higher risk, higher long-term potential. 15% in real estate investment trusts, owning property without owning property. 10% in individual stocks, companies you have researched and believe in. You are not putting all your faith in one idea. You are spreading it across the global economy. That is called diversification, and it is the closest thing to a free lunch that investing offers. Now, I need to talk about something no finance chart will ever show you. The feeling of watching your $10,000 drop to $8,000. It will happen. Markets correct, economies contract, crises arrive without warning. And when your account shows negative $2,000, everything in your body will scream, sell, get out, cut the losses, run. Here's what history tells us. The investors who did not sell in 2008, the worst financial crisis since the Great Depression, recovered everything and more within 4 years. The investors who did not sell in March 2020, when the world shut down and markets collapsed, watched their portfolios reach all-time highs within 12 months. Every single crash in modern market history has been followed by a recovery that reached higher than before. Volatility is not your enemy. Panic is. At $10,000, your greatest asset is not the money in your account. It is the discipline to leave it there. Level 4, $100,000. The threshold, where wealth becomes real. $100,000. You are now in a category that the majority of people on this planet will never reach. Not because the system is rigged against them, though it is harder for some than others, but because most people never sustained the habits long enough to get here. You did. So let us talk about what that actually means. At $100,000 invested at 8% annual return, your portfolio grows by $8,000 per year. That's $666 per month generated by money you already have while you sleep, while you work, while you live your life. Passive income is not a myth. It is math. And at $100,000, you can feel it. But here's where I have to give you a warning, because this is where more wealth is destroyed than in any market crash. It's called lifestyle inflation. You hit $100,000 and suddenly you feel rich. You upgrade the apartment, you buy the car you've been eyeing for 3 years, you eat at different restaurants, you dress differently, your friends notice. And before you realize it, your expenses have risen to match your income. Your savings rate has collapsed. The distance between what you earn and what you spend has vanished, and you have reset yourself to zero. The research on this is painfully clear. The vast majority of people who appear wealthy are not. They have high incomes and high expenses. True wealth, the kind that generates freedom, lives in the gap between what you earn and what you spend. At $100,000, the strategies available to you expand significantly. You can now think about tax loss harvesting, strategically selling losing positions to offset capital gains and reduce what you owe the government. Done correctly, this saves you thousands per year. You can access funds and investment vehicles that require higher minimums. You can diversify geographically, putting money in markets across different continents, currencies, and economic cycles. And you should seriously consider working with a fee-only financial advisor, not commission-based, fee-only, someone whose income doesn't depend on what products they sell you. At $100,000, the cost of bad advice is now significant. The benefit of great advice is even more so. I also want you to think about something that most finance content ignores completely. What does your money mean to you?
At $100,000, you have to answer this question, not for a spreadsheet, for yourself, because the way you answer it will determine whether you keep going or stop. Is it security? Then define what security looks like for you and protect it. Is it freedom? Then calculate exactly what freedom costs and build toward that number. Is it legacy? Then start thinking about the structures that carry your wealth beyond your own lifetime. Money without purpose is just numbers. Money with purpose is a plan, and a plan is what gets you to the next level. Level 5, $1 million, the summit, and what nobody tells you about it. $1 million, the number that appears in every finance video, every motivational poster, every dream conversation between friends asking each other, what would you do if you had $1 million? And now, here you are. It is an ordinary morning. You make coffee. You check your account. $1 million. And the most surprising thing happens. Life looks familiar because the habits that built this number never left you. The discipline, the patience, the refusal to panic, the quiet, consistent belief that long-term thinking wins. $1 million did not change who you are. It revealed it. Let me show you what this number actually produces. There is a principle called the 4% rule. Based on decades of market research, it states that you can withdraw 4% of your portfolio every year, adjusted for inflation, without depleting it over a 30-year period. 4% of $1 million is $40,000 per year. That is $3,333 every single month, while your portfolio continues to grow. You are no longer trading time for money. Your money is working, and you are living. This is what financial independence actually looks like. Not yachts, not private jets, not a lifestyle built on showing off. It is waking up on a Tuesday morning and knowing that today you chose to be here, not because you had to be, because you wanted to be. That is freedom. I want to tell you what the $1 million is actually made of. It is made of the Saturday night you stayed home instead of going out and put that money into your investment account instead. It is made of the vacation you delayed by 1 year, the car upgrade you refused, the subscription you canceled. It is made of every market crash you lived through, heart pounding, account bleeding red, and did not sell. It is made of conversations you probably had with people who told you that investing was too risky, too complicated, too slow, too boring. It is made of the discipline you built at $100, strengthened at $1,000, tested at $10,000, matured at $100,000, and confirmed finally here. $1 million is not made in one decision. It is made in 10,000 small decisions across years through doubt and fear and temptation and impatience. And then, one ordinary morning, there it is. We started this journey with a coin, a single coin dropping in slow motion, landing on a surface. We ended here, not because the journey is over, but because you understand now that it never truly ends. Money, once set in motion with intention and discipline, keeps moving, keeps growing, keeps compounding, long after you stop watching it. The 5 levels you have traveled through today, 100, 1,000, 10,000, 100,000, 1 million, are not separated by luck. They are not separated by talent or connections or the country you were born in or the family you came from. They are separated by habits, by the daily, unglamorous, invisible choice to build rather than spend, to invest rather than consume, to think in decades rather than days. I want to leave you with 5 truths, not rules, not steps, truths. First, start before you feel ready. You will never feel ready. Begin anyway. Second, invest before you feel comfortable. Discomfort is where growth lives. Third, stay when every instinct tells you to run. The investors who stay are the ones who win. Fourth, trust the long game when the short game is terrifying. It always has been. It always will be. And fifth, remember why you started. Not for the number, for the life the number makes possible. Your level is not determined by where you are today. It is determined by the decision you make right now. What will yours be?